Good to have you with us, Eric. Let's talk about what Alibaba just reported. Now, you said it's a mixed report. What did you see most important of these figures?
Yeah, it's a mixed result in the first quarter, but first quarter is the more transitional quarter for Alibaba. We're still very positive on the stock. On the positive side, the stock beat the profit, operating profit by a wide margin, about 25%, beating the consensus. And the management has also revised up the full-year margin guidance by about 0.5 to 1%. On the negative side, which we think will invite some scrutiny, is that their deferred revenue and membership growth has slowed down, but as expected in the first quarter. So it's a mixed bag for the first quarter result.
Okay, what about this emphasis on the domestic market going forward? Is that the right strategy for Alibaba, Eric?
It is absolutely the right strategy, and we are going to see more results starting from the second quarter when they kick off what they call the China Trust Pass Basic program, which lower the price and increase the ARPU for its membership. So overall, we expect an increase in ARPU coming from that market. That strategy is certainly very timed because China is increasingly become a domestic growth-driven story.
Yeah.
And Alibaba has a unique advantage of doing domestic because it can do the full supply chain solution, including the payment. Well, doing that for export will always be difficult.
Okay, let me ask you this, Eric. What I found really interesting is that you said Google's exit from the Chinese market is actually beneficial for Alibaba. Aren't they in two different business segments here? How does that work?
Well, I think we did say it benefit marginally. We have a buy call on Baidu as well, and I think Baidu is the main beneficiary. But Google China derive 40% of the revenue from Google's international side, which are mostly Chinese exporters advertised in Google.com, U.S. site. And as Google get into more and more troubles with local government, the advertisers will be reserved about doing business with Google, and Baidu today does not do any business in U.S. So Alibaba.com becomes the only beneficiary.
Okay, let me tell you this, Eric, because we have the Google AGM taking place right now in California, and there's some news this morning that Google might not be pulling out of China. How does that affect things?
Yes, well, we actually we point that out on the same day that Google announced that decision. And you're absolutely right that in terms of traffic, Google has not pulled off China. The user experience is disrupted, but so far has been unchanged for the Chinese internet users to access Google. But on the business side, the damage to the confidence of the partners and the customers is substantial. We also have observed 35% decline in traffic to Google's website, which means Google Hong Kong and Google China combined. It's basically because Chinese internet users are not sure whether they can access Google tomorrow, so some of them did switch to Baidu. But as a whole, that there's some damage on traffic, but there's even more damage on the business side of Google in China.
Okay, Eric, let me ask you quickly about target price, because you have a $20 target price for Alibaba. It's currently trading at $15. Now, it seems like your calls are a little bit more bullish than the market consensus. What's the outlook here? Well,
the outlook, I think, right now, as we said, that Alibaba is in a transition, both long-term and short-term. Long-term, the company is one of the oldest internet companies in China, and they are transitioned to be more transaction-oriented and more pay-for-performance-oriented. So in a sense, that more like Baidu and more like Tencent. That transformation is going to drive the long-term upside for this company. And because Alibaba has close to 70% of the market share in China's B2B market, the success of that transformation is almost ensured. In the short term, the company has just completed a one-year transformation on its export platform, what they call Gold Supply Starter Pack, and they're on the verge of starting a second round of similar program on the domestic side of the business. So we see a little bit of a transition in the first quarter, but starting from second quarter, we will start to see the growth matrix to return again.
Okay, well, thank you so much for your time, Eric. Nice talking to you. Eric Wen, he's the head of internet research at Mirae Asset Securities.